Hi there. So I'm just going to do a review of what happened on the 18th of July because I think this was a bit of a turning point for me. Essentially, as you can see, I've marked up that price took the Asia high and I'm reading the tape. I am using a particular strategy that I was thinking of where trying to get in early from the 9:30 open. I am expecting price to go lower towards my point of interest, which is down there. And then I look at the 1 hour time frame and I'm thinking, yeah, that's okay. We're moving down. And moving towards that point of interest. As you can see, I mark up that volume imbalance there. And price is going, well, at least I'm thinking it's going in the right direction. No, obviously the time that we are now approaching the 9:45 macro. And this is where, things start to go a little bit away for me because I'm now thinking, oh, actually, are we going in the right direction? I say to myself, no, we're not. I close the trade. We then head on up into the next area and I'm thinking, okay, well, maybe we're going higher now instead. Obviously, I put on a trade. I've got my levels marked out. I'm using another strategy. I'm thinking, no, this is the macro. We've done the reversal. This macro is going to move on up. And again, as you will see, I'm looking at SMT at the bottom. I see that. I'm thinking, yeah, I'm doing right. I've put on the trade. The SMT is at the bottom. I'm thinking we're going up. There's our fair value gap. And then look what happens here. We see that price returns again back down to where it was, and I'm in massive drawdown and I'm thinking, well, what's happened there? Why hasn't this worked? I've used I'm looking at too many different things and I'm using several different kind of tools or strategies, but I'm probably mixing everything up incorrectly because there's one thing using the time cycles. I'm looking at the time. I'm looking at the 9:30. I was looking at how price may move right from 9:30 to your point of interest. And if you notice, I already had my point of interest marked, but I didn't wait until price got to my point of interest before entering the trade. I'm trying to trade to my point of interest, and then I'm trading against my point of interest. I'm then picking up this circle tool, which is another tool that I picked up in my thingy, looking at Michael Jenkins and how he uses this tool to square the low to the high. I'm also using the fib tool, looking at the 50% of the range, looking at that pullback, looking at where the 75% of that range is. And I'm thinking, oh, actually, maybe we should be I should be looking to enter back down there at 75% pullback. I'm now looking at the range of where prices moved thus far. I closed the trade and again I changed direction to go back down towards that because I'm thinking, actually, no, maybe I'm wrong. As you can quite clearly see, there is my point of interest. We took that high, we've got a busy through it. I had that marked up from the beginning, but I didn't wait until price got there before I looked to enter any trade. But anyway, as you can see, I'm now moving in on the sell side, and I am, I'm in profit. So I'm thinking, okay, I've got it right now. I've rectified the situation, and I am moving in the right direction. Prices started to retrace again, and I am just kind of waiting and monitoring. But this is the point, it's almost, I'm kind of chasing trades, and I'm mixing up lots of different kind of tools and strategies that I've come across over the time. As you can see now on the 1 minute time frame, price continues lower, and I'm thinking, I've still got my take profit a little bit further down, but as you can see, price is now at 10 o'clock, and or to heading towards 10:15, and price is moving out. So we're still in that macro, or we're coming to the end of that first 9:45 to 10:15 macro. And this is something that I kind of realized the other day about how to utilize those macro times. And I'll be honest with you, whilst Zusi has been great at showing us how it's time first and having those macros, Zusi and ICT of course, but it only hit home to me with Jamie MMXM to understand this. But anyhow, as you can see, I closed the trade. I was in profit. Fine, we made it. I should be out, right? But then I jumped in again. It went in the wrong direction. We had back and forth, and I'm thinking, okay, so this is my market maker buy model now, and I'm trying to do both sides of the curve. Again, we're going back up. Price goes back and forth for a little while. I'm thinking that's my market structure shift, and we are heading back up. And this is what chasing trades looks like. I've got my stop loss on here. Again, we're seeing a big red candle. I'm checking what's happening on the 15-second. I'm not moving my stop loss. I know have a tendency to do that. I've bought another trade there. I'm thinking that was just a retrace to then go back up higher. And ultimately, there we go. I get stopped out again. Is that not enough for me? Apparently not. So now I'm thinking, okay, well, actually we're going lower. So I'm tracing that trade because I want to recover those two little last losses. And I'm thinking we're heading down towards that area that I was thinking we would be retracing to. So as you can see, I placed obviously another trade, and this is what chasing trades looks like. And if you are doing this, you've got to just stop. And I'll be honest with you, after this day, this is where I kind of took a stopgap. I kind of took a mental check, like I've really got to get this shit sorted out, because you can't be a successful trader if you're just trading trades. And I'm sure everybody goes through this. You keep watching YouTube videos, you keep reading stuff. As I say, I discovered the whole Michael Jenkins thing with the GAN and using the arches and the circles and so forth to square the high and the low. So I was looking at that. Obviously, if you saw any of my previous videos, I was using the time zone Fibonacci to get my manipulation zones. Obviously, I'm using the time cycles as per Zusi. I'm using all of these fair value gaps, inverted fair value gaps, all of the ICT kind of PD arrays. There's just so many different things that you can use and how you want to view price. As I say, even the other day I saw another video from somebody about using that, that first kind of 5 minutes of the opening, and if price crosses a particular line, then you could catch the reversal. So I was also trying that at the beginning, and as you can see, price has just gone back and forth. I'm still in the trade, and then I'm just like, why is it not going the way I am expecting it to go? Well, it's not, because I'm not sticking to one specific protocol. I'm not sticking to anything at the minute. I'm just literally clicking buttons left, right and centre. And as you can see, I caught myself and I just got out. I was just like, that's enough. As you can see from here, price did return only to 50%. As you can see, you pulled out the fib tool just to show you that price did return. But, as I say to you, it's not worth the mental equity it takes to go through all of that. So if you are tracing trades, you just got to stop and take a check. refocus, stick to one particular model. That's what I'm trying to do, and I'm hoping that in these coming weeks and days that I get much better at doing this, because this really was a wake-up call for me. Hopefully you enjoyed it. I say enjoyed it, but hopefully if you see yourself doing this, then this could be that wake-up call that you also need as well. All the best.